It's setup Sunday, and as you can see in the background, we have some nice results over the past 12 years for a pretty damn simplistic setup, actually, which is only going to require 2 indicators. And of course, you can use our service, the Crown Quant automation service that you see right here, to not just backtest the same thing, but also automate your trade execution and also backtest whatever sort of trade ideas that you might be having on top of this. But this one, very simple, actually. So I'm just going to get right on into it. I want to show you on the chart right here. We're literally just using 2 indicators. One of them is going to be the BBWP indicator, which you can find freely available on the TradingView library. Just type in BBWP, and it will require some special settings here. If we go into the settings tab, we're going to be assigning the length to 13, which actually should be default, but the look back will be 100, which is not default. I think default is going to be 252. So assuming that you can do that, you got that part sorted, all good. I did lie, however, it's going to require 3 indicators because now that I recognize it, yes, we are going to be using, of course, the trend indicators in the background here. So we're going to be using EMAs for that, 21 and 55 exponential moving average cross, and we're going to be using actually the jewel as well. We're reviving the jewel here. We're just going to be using a very small portion of it, the fib portion of it. But you can actually recreate this yourself using a DMI. So if you don't have the jewel, you can get similar results to it. You can kind of get an understanding of where things are likely at using a DMI indicator. So with that said, I'm going to go through the trade strategy checklist here, and we'll just run this one down. I expect this is going to be a very short video. It's hilariously simple. What we're going to be doing is we're going to be, what time frame we're going to be using. We're going to be using the hourly time frame. We're going to be trading long only on this particular strategy, and the main sources of edge, Jewel, BBWP, and now that I recognize it, we need our EMAs. We need the 21 and 55 EMAs. There we go. What's going to define a risk management parameter? So if this condition is met, we will exit the trade, and that would be a close below the range lows. You can do this visually if you like to do things in a discretionary fashion, or if you like to have things automated, or just something, an algo to kind of spit it out. You could use something like the Lux algo, as I kind of indicated there. If you want that, just go to the public library, type in Lux algo, and you will find, actually don't even type in Lux, Lux algo, just type in Lux, and you're looking for the support and resistance with breaks. In fact, Lux support and resistance probably brings it up. Yeah, there we go. Okay, it's got over or close to 21,000 likes on it now. And so that will bring up sort of the last range low for you, which is what we're concerned with if we are going to be managing risk using this tool. Anyways, moving on from there, how positions be entered. That's all we're looking for. 2 things. The 21 versus 55 exponential moving average cross, which I refer to as a crown cross, so 21 v 55, EMA, must be in an upside fashion. So that means that the 21, in this case, the yellow moving average here, must be above the green 55. If that condition is present, then that is valid. That condition is valid. And the next one is we need to see that the BBWP is above 50. That's it. That's literally it. Over here, we can see that the 50 line is already dotted, but I'm going to put in a nice green horizontal bar there. Basically, anytime that we see those moving averages in a nice upwards posturing alongside BBWP above 50 percentile, we're in. we're in. Crazy, just like that. And well, from there, we wait. We wait for either the risk management level to be hit, or with closed below to be more exact, or in profit taking, we're going to be waiting for the jewel fib portion to get above 95. So that would actually be this DMI in the background. It's labeled as a fib. It's actually a DMI. Just the original creator, I think, goofed that one up or something. But we've just run with it. So in this case, when we see this squiggly line here, when that gets above 95, we'll take profit. So as you can see, again, in this particular instance, we see that it's actually above 95 right here. So that would actually be a profit taking time, which it actually does take profit right there actually on that trade. Nice. Anyways, that's it. That's literally it. No days omitted, no percent stop loss or take profit, although you could apply something like that. I did add that as a consideration right here. But this one actually will trade every day. It's been tested on every day. And I did find that it did have better results trading every day as well. And if you do want to put in a stop loss by percentage, I would say 3% is probably good. It's going to change the results a little bit. Yes. I personally like to have stop losses by percentage just because I feel better that way. But You don't have to do that, and these results will be relevant to you that I show down here. Even if you don't do that, because that is actually how this one is tested. If I test it with 3%, the net profit actually will go down a little bit. It will go down a little bit, but your average loss will also go down as well. All right, sweet. So with that said, we can just run through a few examples here. You're probably gonna laugh, but let's just go through it. So I can see that we already have this example right here. So we have moving averages in an upwards posturing. 21 is above the 55. Again, yellow above the green, and you can see right here the BBWP closes above the 50 percentile marker on this period right exactly here. So all those conditions are present, aka we have a long entry, and then we just wait for the DMI actually to get above 95, which happens later here. Or if price were to hit our risk management, we would be waiting for a closure below this blue bar right here. Obviously that does not happen in this instance, and you can see that it's actually a rather quick and small trade. I mean, this is an hourly, so it's actually like a $500 trade, but there's a lot of these, just kind of in and out quick, just scalping uptrends. Now I think the next question would be like, hey, why wouldn't you just buy and hold instead of do this? And it's like, yes, you can definitely do that. In fact, you can do both at the same time, because in cryptocurrency land, we have something called the inverse perpetuals, meaning that you can actually hold Bitcoin as your collateral to put on margin trades, meaning that you're holding Bitcoin and you're also trading for more Bitcoin. So you are getting the benefits of holding Bitcoin over a long period of time, and you're also getting the returns from trading as well. So it's kind of like it's a nice little thing about cryptocurrency land. One of the reasons why I moved over here. Anyways, I can see that we have a loss over here. Or do we have a loss over here? This one's in the trade for a very long time. Yeah, it does have a loss on that particular one. Let's go over a couple more. Let's just see. I want to see some that actually take a little bit more time to play out. We can see this one right here, actually, now that I zero in on it. This one's this strategy, weirdly enough, it almost enters every time after a winning or losing trade. It's like back in the trade basically. But as we can see here, moving averages are obviously in upside posturing. We see that BBWP is also above 50 percentile at that same time, and it is fresh and open for a new trade. And so we would have entered right there at about 66,900. And when does the DMI get above 95? Happens over here on a closing basis, and we would have exited 70,000. So, entering 67, exiting 70,000. I'll take it, and I'll spend it as well. Anyways, going on from there, I think you probably get the idea. It's hilariously simple, but simple does not mean that it's not effective. And in this case, this one's incredibly effective. Many of these trades actually being closed on the next hourly closure. So do be aware of that. A couple of big losses right here, as you can see, but this one does benefit longer term from a higher win rate, over 72% strike rate. So the average wins by percentage are actually gonna be smaller than the average losses by percentage. So this one is benefiting from a higher strike rate and also just taking more trades over time, of which it's had close to 2,000 in the past, basically 11, 12 years. So yeah, I think I'll leave things right there. It's just a quick and easy video. Again, if you have access to the Joule, you can easily apply this immediately. And if you don't, then you could use a DMI to kind of get something similar for that portion of it. And from there, it's up to you how you want to play it out. Of course, you can optimize it further. You can do whatever the hell that you want with it, but that is a nice little, working template that you can iterate off of and, well, make your own. So we'll leave things on that note. As always, I want to wish you the best. Take care, much love, and see you hopefully next time.